Hello and welcome to this video. Today I'm going to be doing a stock analysis on Docusign. If you don't know what Docusign is, it is a platform where you can send in documents and then have them signed, just like, say, if you were to sign something down at the bank with your actual signature. Docusign lets you do that over email or any other sort of electronic devices. Now, of course, if you like this video, don't forget to leave a like and subscribe. And remember, this isn't financial advice. This is purely for entertainment and educational purposes. Now let's look at the stock. Now, as you can see here, it has actually risen quite nicely ever since 2024. It was all the way up in 107, and then we had a bit of a tumble ever since. And now, as you can see here, the earnings for Docusign are quite nice. As you can see, up by 17%, up by 3.5%, up by 20.2%, up by 3%, and up by 1%. So you get the gist. They do have quite nice earnings. You can also just see in the RSI down here, the relative strength index. Now, if you don't know what this is, if something is above the middle here of 50 and below 70, it is in the upwards trading channel. If it's below 50 and above 30, it is in the downward trading channel. As you can see recently, let's say from this point on, you can see it is trading down here, which is the downward trading channel, which means it is going down. Then we see this spike here. As you can see, then we also see a spike here in the RSI, which means that now it is trading in the upwards channel, which means there's upwards momentum. And of course, we also see stuff like this, which is when it's overbought or oversold. This is when we have quite high sharp rises, as you can see here. Nice sharp rise there, and especially also right here. That's also why we saw it peak and then tumble right after. So yeah, overall, it is a quite nice stock. I like it a lot because the world in general is getting more and more and more digitized, which means they are going to have more and more customers, and they are by far the market leader at this point. And they have quite high switching costs. That's the same like Excel and Word. So if you're already using it, you are not gonna use anything else unless that there's come something significantly more better. And it is really a simple business model. They are just signing documents, so it's really that simple. That is why it is a great stock. If you like the digitizing and more digitizing world, it's a great stock. Of course, we might not see huge growth in companies like Google, Nvidia, or maybe Apple, because, as I said, it is simply just signing virtual paper. Now, the next earnings report is in 39 days, and as you can see, it is a quite decent sized company with 16 billion. So yeah, quite decent sized company, which means also banks and other investment bankers are allowed to trade it. So that is also a plus, of course. Something you have to know is, if you don't know this, companies that are too small can't be traded by investment bankers unless they get specific access from the SEC in the USA, and many other companies alike. They need to be recognized because it is simply too volatile. I will run over the earnings, which are quite nice. As you can see, it is in trip with others. It is a bit lower than the next earnings coming out here in 39 days. So I think they're going to beat that as well. Now, they don't pay out any dividends at all at the moment, and that is, of course, as you can probably guess right down here, they didn't really make that much money until 2024, where they made great money. As you see, margins on 35%. That is insanely great margins. This is because now they have a lot of users, and once you start it, you stick with it. It is a very sticky business, so to speak, because once you use it, you are gonna keep using it because it just sticks to you. Now the performance on this, as you can see here, let's go back from when it was launched on the IPO in 2018. So it is a relatively new company. As you can see, some years like 2020, it really boomed, and that is also, of course, because of the pandemic, where a lot of people had to suddenly use companies like Docusign, so they had a huge rise up here. Now, 19 also was quite great, and so was last year, and that was because they made 48% more money than were anticipated. Now, we did also see, of course, some years where they performed quite badly, like 22, but then again, basically every single company in 22 lost. 21 also was quite a bad year. We don't have the best year at the moment in 25, down by 8%. And then we have some years on here where we are trading up by 0.8% and up by 4.7%. So as you can see, it's either it gains quite nicely or loses quite badly. So it is a volatile stock, so you need a bit of ice in your stomach if you want to own this. I personally don't own any Docusign at all, but I could be interested in owning it in the future. Now, if you look at the technicals on this stock, as you can see here, it is a buy currently in the summary for the day. That is, of course, also because it is up by 1%, but also just because it is having a upward momentum at the moment. And as you can see also for the month, it is still a buy. It is even a strong buy in the moving averages. So if you're a momentum trader or a technical trader, now it's not a bad time to get in, as it is also currently setting at previous support levels. As you can see here, it is matching these tops right here. Let me just make that a different color. As you can see, we had a top here, and we had a little bottom here before we did see this huge spike, and also a bit of a resting position right here for a few days. So currently it is laying on a support slash breakthrough line, so it might increase a lot more as we are seeing current upwards momentum. Now the analyst rating on this, they are quite hold compared to other stocks I've seen in the tech world, because of course this is a tech stock. But we have 18 on hold out of the 23. We have 4 strong buy, 18 hold, and 1 strong sell. Quite interesting. We have this many holds. I think the reasoning behind this is it has had quite a nice rise, and people are still a bit unsure about the valuation, and maybe this won't keep they won't keep earning this much money, as you see margins of 35%, because it is, of course, they made more and better results, but then again, all of a sudden 35%, it might be an outlier. Let's say maybe in 2021 or 2025, of course, it might only be 11%, then this stock might tumble quite a bit. So I think that's why there's so many hold if you own the stock. So yeah, currently for the analyst ratings, it isn't get into the stock now, but it is a hold if you own it. Personally, I think it's perfectly fine to get it now. Personally, I have other investments I would rather make than Docusign, but it is quite interesting at the moment. And you can also just see that the revenue model is expected to increase. It is expected to decrease a little in 2025. I'm not quite sure why that is, of course, but as you can see, overall, it is just a very, very nice increasing of the estimated revenue that they're going to make. So yeah, very nice stock. So yeah, if you like this video, please don't forget to like and subscribe, and leave any comments below of any other company you want me to make analysis of. Thanks for watching.